The crypto markets are crashing and the walls seem to be closing in on Bitcoin and Ethereum. The FTX collapse led to leading cryptos bleeding profusely, and BTC is now at its November 2020 low of $16,000. The markets are expected to bleed further as more bad news is likely to come out from the FTX fiasco. 3 crypto tips to survive the market crash. 1. Don't give in to panic. Looking at the charts beaming in red can cause anxiety and distress, making users rethink their investments. Some hold on while others sell in panic and jump ship, fearing further downside. The present correction is getting rid of unwanted market players that will level the playing field from big names who initiated behind-the-scene transactions. Therefore, don't give in to panic at this moment as the markets are getting rid of weak and corrupt hands. 2. Keep an eye for the long term. The markets are highly unlikely to see a spike in price this year, and 2023 might also remain on the back foot. Accumulating your favorite tokens now during the crash can deliver better returns when the economy stabilizes. It is advised to keep a window of a minimum of 4 to 5 years, and the long term could generate decent profits. Top players in the markets made good wealth only through the long term, and only a handful made it with short-term holdings. 3. Avoid crypto influencers. First and foremost, keep your distance from crypto influencers who shill tokens on YouTube and Twitter. They are mostly responsible for causing half the damage that's engulfed in the crypto space. The more you listen to them, the more you feel attracted to invest in obscure tokens. Avoiding the influencers can keep you with an open mind and initiate better investments based on your own research. Therefore, it is better to remain prepared for the worst when tragedy arrives at the doorstep. In this article, we will highlight how to remain calm and survive the ongoing crashing markets. Many are calling the current phase of crypto one of its worst. The Terra collapse over the summer made history with the death of a blockchain, and the FTX collapse this month reinforced the need for cold storage. Meanwhile, Bitcoin, BTC, the original cryptocurrency, fell to 2-year lows. All the gains made in the incredible bull run of 2021 are all but gone. Investors are back to where they were before the 2021 crypto hype. Although the price of Bitcoin, BTC, has plummeted, there is one metric that is moving in the positive direction. According to Into the Block, Bitcoin searches are soaring on the internet. Now searches could be for a host of different things, but it could also mean new players exposing themselves to the asset class. A spike in popularity has always played out well for the original crypto. When BTC was at its highest, a majority of people wished that they had purchased the token when it was cheaper. Well, that time has now arrived. BTC is cheaper than it has been in months, and it could potentially lure in an army of new investors. On the other hand, analysts at Morgan Stanley believe that retail investors will begin selling their Bitcoin if the token hits $10,000. According to a report by the financial giant, so far it was the institutions that were selling, while retail investors are holding on to their BTC. However, this could change if the original crypto continues to move downwards. Market volatility is being increased by creditors selling digital assets to offset their risks, and they will likely disclose their positions in the coming weeks. According to the Morgan Stanley paper, crypto businesses primarily lend to one another, which has limited the spillover to equity markets thus far. At press time, BTC was trading at $16,775.98, up by 0.6% in the last 24 hours. Furthermore, the token is down by 75.7% from its all-time high of $69,044.77, attained in November of 2021.